Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18. Well, let's discuss something important because we've been seeing a lot of geopolitical tensions globally. And exporters, they are bracing up for fresh supply disruptions as geopolitical tensions in West Asia have intensified with the Israel-Hamas war. In fact, some companies are anticipating high-risk premiums given that shipments to Israel have seen a steady increase in the past few years. To discuss more, Sharad Saraf, the chairman and managing director of Technocraft Industries, is joining us now. Now, remember, Technocraft is a key export house that supplies products ranging from steel pipes to textiles. Welcome to the show, Mr. Saraf, and discussing this important update that we've been seeing globally. First up, I wanted to understand what is your exposure to exports, and in that, how much of it is to Israel? And have you started seeing some impact on shipments because of whatever is happening in that region?
Well, fortunately or unfortunately, we do not have a very large exposure to Israel directly in terms of export. But we do have imports from Israel, and there we are a little bit concerned as to what's going to happen because the imports are basically for defense purposes, for producing some defense equipment. So there we are concerned. As far as exports are concerned, we have exports of only about 15 or 20 crores a year, which is not a very big deal. And so far, it doesn't appear that it's going to be affected. But I am expecting the war to escalate, at least to some extent, and that may create a problem.
Sir, exports to Israel are 15 to 20 crore on an annual basis, right?
Yes, yes.
Okay. And in which segment, and also imports? What's the quantum that you import? And if you're unable to do so, what will be the overall impact on the value of the products that you manufacture?
We are exporting drum closures to Israel and the scaffolding systems, and that will not affect our company in any way because out of 2,000 crore, for some time if we lose 5, 7 crores or 10 crores, it doesn't matter, we'll make it up somewhere else. As far as imports are concerned, value-wise it is not large, but strategically it is important because we can't finish a major job until that small component is also there. But fortunately, we do have stocks and we are quite well placed. It should not be a major problem or any reason for concern at the moment. And the parties with whom we are dealing are also quite far away from the war zone. So I don't think Technocraft company would be affected anyway. But I'm more worried about our country's bilateral trade with Israel. That may get affected a little bit.
Okay. Mr. Saraf, you spoke about maybe things could escalate. We hope they don't. But are you looking at any alternate sources for the small equipments that you would get for your defense products? You're saying that you do have stock right now.
Yes, we do. We do have alternate sources. So obviously we will initiate action there. So we will not sit out, but at the moment we'll wait and watch as long as we.
Can you tell us what is this critical equipment that you import from Israel? It's used to finish which product of yours? And what's the inventory that you're sitting on? Suppose a business from Israel stops for the next 3 months, 6 months. You're covered for how long?
No, we are covered for about 1.5 months. And unfortunately, I am not permitted to give more details because it is a defense job and it's governed by several secrecy rules and laws, and we have signed an agreement with defense, so I cannot divulge on what we are doing. But there's no need to be concerned about.
Okay, that's good to know. That's not much to be concerned. Mr. Saraf, but industry-wise, if you tell us, since you do export major share of your revenues to other geographies, is there any impact on shipping rates that you've started seeing already? Are they going higher? Or is this something that you're expecting in your conversation with your suppliers that, yes, they could buy or sell at a higher rate going forward?
No, not at the moment. No, there is no upward movement of freight rates at the moment.
Okay. In last couple of months, have
freight rates... the war at the moment, Reema, is quite localized. The war is localized. So if it remains localized like that, then it will not affect, because the trade routes are not affected by this war.
Okay. So do you have alternate sources in case, things go south? Is there a plan B?
There are alternate sources. There is no question on that. Some adaptability is required. Some changes are required, which we can do easily. It's not a problem.
Okay, all right. So that is about what's happening because of the ongoing war, and it's good to know that it's not impacting most of the businesses as of now.
Yes.
And let's hope that it doesn't escalate from these levels on every ground possible, not only from the business side. Let's talk about your business in general, Mr. Saraf. In the fabric business, you do have exposure to Asia and Europe. How is demand going on there? Is Europe getting impacted because of whatever's happening? Because the other sectors, I've spoken about some demand decline coming in Europe. What's your take in this particular segment?
Yes, Europe is very badly affected. So our drum closure business is down by almost 25% in Europe. We are struggling hard to make it up from other sectors, other geographical sectors. But I was recently in Europe just a week ago, and I could see myself that there is a serious problem in Europe. It's continuing even now. So there is no, no sight in near future that there would be any change.
So how much exposure do you have to Europe, Mr. Saraf, across all the segments?
Yeah, across all the segments in our company, we have an exposure of over 150 crores.
150 crores, that's just to Europe?
Yeah.
Okay.
Okay.
So what could you do for the full year this time, given the issue with Israel? Europe is still hurting for you. Last year, you did a top line of 4%. What is FY24 looking like based on your visibility?
We would do similar. I am not
4%.
expecting any major improvement. But we are doing some new projects. And when they come on stream in FY25, actually, there would be a significant improvement in our top line, bottom line.
Okay. And there were plans of restructuring the textile business. Will this be happening in FY24, or do you expect it to happen next year?
No, at the moment there are no plans.
But next year? Not at the moment, but are you
We have studied this and we did not find it cost effective.
Oh, okay. So you're not going to go ahead with it. Okay, so that's about your textiles business. Mr.
Yes.
Saraf, last question before we let you go. 20% margins is what you did in FY23. Considering the situation right now, what's your take? What kind of margins would you be able to do in FY24?
We will have similar margins. There is no reason for margins to go down.
Okay, all right, Mr. Saraf, thank you so much for joining us today and explaining to us what's happening globally for exporters like yourself and what the industry outlook is going forward as well. The stock is at the day's high. It's high by 7.5% on the back of the commentary that's been coming in from the management. Well, with that, we'll wrap on the show. As we do that, listen into some